Hello, traders. Gary Wagner here. Approximately 1:30 in Honolulu, 7:30 in New York. It is Wednesday, 11th day of August, 2021, and this is the Daily Report for Gold and Silver. On today's show, we're going to have a little different take in that it is my belief that we are currently in a bear count in regards to our Elliott wave theory and current count. Most people are familiar with a bull count, but on today's show, we will explain both types of counts and how that fits in to today's market scenario. That will begin right after the price board, which begins now. After falling from above $1,800 last week to a low of $1,680 on Sunday of this week, we have seen not only some stabilization in gold, but we are also seeing some signs of a potential bottom. What is most interesting is this exaggerated low that came in. That was in overseas trading in Australia and Asia. But what was most impressive is it was able to get back about $68 from the low to the closing price. Then yesterday's activity was a pure doji right at the 78% retracement. Quite interesting. And then today we opened just at or above the 78% retracement and then climbed up about $21 on the day. Currently, we have December gold fixed at $1,753, up $21.30, or a net change of 1.23%. The vast majority of today's gains in gold can be directly attributed to market participants either short covering or buying the dip. The dollar provided some mild tailwinds as it lost roughly 0.1%, but that is 1/12 the amount that gold actually rose today. While it is clear that we could be seeing gold recover and find some tentative support, this first chart that we're looking at is a daily candlestick chart, but it is also with an Elliott wave count. And what is interesting is we can see the moment we went from what is basically called a bull count, which would simply mean you have a series of waves 1, 2, 3, 4, and then 5. That is followed by a corrective period, which is an A, a B, and then a C. Again, we had a B, and a C, but in the case of this last one, that's the actual switch from a bull to a bear count, because now what we're witnessing is a 5 count down. Waves 1, 2, 3, 4, and then 5, which means that what we should be getting now is going to be a bear correction, which will be defined to the upside. A, R, B, and then a following C, if this theory holds true. For those of you unfamiliar with Elliott wave and Elliott wave counts and wave theory, there's two basic count types, a bullish count and a bearish count. Both types are composed of a total of 8 waves. There is 2 sections to that. The first one is the impulse move, and that will move in the primary trend direction, meaning waves 1, 3, and 5 in a bull count will move higher, with corrective waves 2 and 4 moving lower. So you will get something like this in terms of a wave count, in which you will get your wave 1, corrective wave 2, your longest wave 3, your second corrective wave 4, and then a 5th wave. At the conclusion of the 5th wave, you go into a corrective move. And a corrective move is typically a counter to the trend, so you have it go down in a bull count with a basic A, a B, and a C. Now, a bear count is the same thing, only kind of flipped on its head. We have just put up an illustration of a basic bear count, and the key to a bull or a bear count is once the ABC continues, if the trend is intact, meaning if it continues to be bullish or continues to be bearish, it simply repeats itself. But as you can see, you get really the opposite. You'll get wave 1 in the primary trend direction, your counter wave 2, which would be up in a bear count, then your longest wave 3, a corrective wave 4, and then your final 5th wave. From there, you will get an A, a B, and a C. So there is no doubt Right now, we are currently in a bear count, and that, of course, could change at any moment when market sentiment shifts, but that's why we are looking at the chart labeled like this. The reason I'm bringing up the explanation of a bear count is first because I believe that we certainly could be in a bear count. Gold has definitely been under pressure. Secondly, that being said, if we are at the conclusion of a fifth wave down, that means we are going to get higher pricing in gold during a correction. Our A wave will take us to higher pricing, the B wave will correct, and then our final C wave will take us yet to another high. That is something we certainly want to keep on our radar. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.